Morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES here, the S&P E-mini S&P 500 index futures. And what we're seeing is we're seeing our scenario essentially play out. What we've been doing in the room is basically playing the scenario of the January 2014 bounce, and so far it's worked out pretty much to a T. You had very tight Bollinger Bands that broke lower for a period of 2 days. What you're seeing now is a little bit of a bounce. My ideal bounce target remains the red line here, the 50-day exponential moving average, but I do expect that no matter what we're doing, to involve the lower band today. And right now we're reaching for the lower band now. Lower band comes in today at, currently it's 1921.66. It's a moving target, obviously, because the bands are constantly expanding or contracting. But I expect that the bands do get involved today. I still think there's a chance to get back up into the 42-43 area. What we were doing is we were long 12. We have older shorts from up above, from the Wednesday close up around 65. Then we have other people that got in on the failure at 52.75 on Thursday, and so now essentially what we're doing is we're riding the tail end of those. We were long 12. I just took the last piece of my 12 long off at 27. I want to see what happens this morning, especially off of the regular open. If we get some kind of a buyable dip off the regular open, I'll likely re-enter long. I'd really like that buyable dip to involve the lower band. And then you could see a move back up to the red line. If we roll over from here, what you've got is a very short-term bounce, and that would likely roll back down to, at a minimum, test the yellow line there, the 100-day exponential moving average, and much more likely move down to around the round number 1900 area. At that point, you'd be looking for another short-term bounce, and then you start to ask yourself, well, are the bears beginning to take control of the tape? Are we getting, consistent lower highs and lower lows on the daily chart? Because what you have here, if we break lower and break 1410, is you have a very pronounced lower high on the daily chart versus the 1985-75 highs. So, and if we continue to move up today, what we're doing with this bounce is we are creating the lower high. We're creating the lower high, and we'll have to see where that takes us. The bears are going to remain in control of this chart until the bulls can close above the middle band, right? I currently like the 50 better than the 20 for a bounce target, simply because the January 2014 playbook, band ride playbook, has played out so well. But even on a move above the 50, still the ultimate prize would be to get the middle band back, and we're a ways away from that. The bands are still tight. The Bollinger bandwidth is 3.86. My target area on the bandwidth before we get a meaningful bounce that's sustainable is 5 or above, so we're not quite there yet. So we continue to ride our shorts. We have a plan that we're executing, and that's just a little piece of it. So we'll see how it goes today. Today's a pretty big day. The Bulls need to stay in the game today. They can't just give the tape back to the Bears, because if they do, the Bears should be able to run with that, maybe through the rest of the week. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. We've got a lot of new people signing up. I think people are starting to see, what we're doing here, and it's just it's a group of good traders who are serious about the market, that get along real well, and for people that trade this stuff all the time, people tend to find it very helpful. So come check it out and see if it's right for you. All right, I'll be back tomorrow morning with another webcast. Trade them well.